Market to Market is everywhere you are. Subscribe to Market on YouTube, find us on the PBS video app to stream on demand, and add our 3 podcasts on your favorite podcasting app.
Welcome into the Friday, July 8, 2022 Market Plus. Ted Seifried back with us. Ted, okay, a couple things. I take notes. I try to be very respectful for when you're talking.
I see you doing that when we're talking.
And
that's good.
It's a combination of lots of factors, but a couple of things that you said, this inflation off, and that's also gets to another little side story of the program is when you were on 3 weeks ago, we had to make a quick switch, and all of a sudden you're back here and you have to kind of answer for yourself, and it looked like you had a crystal ball and it was clear as a bell for you.
Yeah.
How'd you feel about that?
I didn't want to see the carnage that we had seen the last 2 weeks leading up into Thursday and Friday of this week, but nobody wants to see that, right? Especially when it's fast and furious like that. But I gotta say, I was feeling this kind of coming, right? And I had made some moves, I'm talking about for my clients in the markets. I had made some moves in the 3 days leading up to that really saved a lot of things. Like I would be really scrambling now to figure out what to do. You always feel good about being right, but also you never want to see that sort of carnage. And again, escalator up, elevator down. Oof, it's hard to stomach. It's hard to stomach that sort of thing.
Inflation off was the term we used 3 weeks ago from what you said several times. I want to get into just slight detour on this. Kohl's and Target, big retailers, especially in the Midwest, have said we have a whole lot of stuff.
Yep.
And we have to get rid of it now. Sales are a-coming.
Sales are a-coming.
What's that mean for someone who is a consumer of both beef, pork, chicken, and they also might shop at Kohl's and Target?
Ooh, fair. I think I know what you're getting at with that question. If you're spending less money at Kohl's, maybe you spend more money on meat.
Or if meat is high,
you spend less money at Kohl's.
Or am I going to have extra money for something else?
Yeah, but I'm going to take this question a different way. The question is, how do you get inflation off? Because that's the thing that I think we all need to really understand, right? People stop paying the high prices that they had been used to paying before. And there's a number of factors that are contributing to that. A $2 trillion loss in cryptocurrency. I know we don't love to talk about cryptocurrency. I've never been involved with it.
Just Dogecoin?
Yeah. Okay, well, that was funny. If you saw the YouTube clip, you had to do something there. But anywho, cryptocurrency, $2 trillion lost. That's a huge chunk of the stimulus that we printed. That's just money that it's not a zero-sum game like commodities are. That's money that's just kind of gone. 22% decline in the stock market, right? So people are less willing to go out and pay money. But not only that, when you have inventories build up like that, then like you said, Kohl's and Target, they have to start lowering prices. That's the definition of deflation. Prices going down, right? That's taking inflation away. It also means that when inventories are backed up, we don't have to produce more to replace those inventories. At some point we will again, but that creates a backlog. And like we were talking about earlier, that means the inputs, and we don't use corn to make clothes, or at least not a whole lot, but the inputs that go into things, right, anything, if we're not needing to produce as many of those, then the inputs, they're priced too high, Paul. So yes, it could mean that we are more comfortable spending a little bit more for beef if we're getting some really good bargains on some clothes and some home goods and things like that. But you just get this overall feeling that the American consumer just doesn't have the purchasing power or the willingness to spend that they had a few months ago.
Well, the willingness to spend is part of all of the sentiment displays. The University of Michigan sentiment display at low levels because the consumer's feeling all of these things that you're talking about.
Well, Paul, if you put $40,000 in Bitcoin back in November and now it's worth $8,000, how do you feel about going and spending money? How do you feel about going and buying a new car? How do you feel if you had a 22% loss in your stock market account since the beginning of the year? A lot of people, even friends of mine that people that weren't on stimulus and things like that, they're really tightening the belt. People are tightening the belt. It's not just the people that had been getting the checks, But that's the thing. We created the inflation by throwing the stimulus checks, all the stimulus into the market. But then the stock market takes that away. Cryptocurrency takes that away. And then in the meantime, these people that aren't getting the stimulus checks anymore, they had paid their credit cards off to some extent. Now they're coming and relying on those credit cards. But then the Fed starts raising interest rates, and credit cards, which are short-term revolving debt, those rates go up even faster. So now you've got credit cards that are maxed out, and you're having to pay back at a higher rate. And oh boy, so that's pushing people into jobs, which is good in the short period of time. But the long term, this is people having less money to spend or having less willingness to spend money.
How about if you have, say, some irrigated corn, like Bradley in Upland, Nebraska? He's asking you, Ted, the early planted irrigated corn in south central Nebraska is tasseling about half as tall as it would be in a normal year. Does he wonders, will the yields lag as well?
Yeah, you got to have big question marks about yields for a lot of reasons this year. But yeah, I mean, you would think logic would kind of tell you, reasoning would suggest that if the plant doesn't have the factory going, that the yields might not be there. I wouldn't be surprised if they are, though. Genetics are just really fantastic. That being said, how much inputs went down coming into this year? As a whole, from a nation perspective, I'm going to say most farmers did what they're normally going to do. But there's some farmers that aren't really, specifically fringe areas and things like that, that maybe weren't as willing to do that. Or, I hear of guys in Kansas that aren't willing to spend another $1 on this crop because of the way it looks right now. So what is that going to do to the yield? I don't know. But overall, I'm going to say that, with the rains that we've gotten in the last week, there's a lot of crops, a lot of corn that looked like it was struggling just two weeks ago. That now looks really good.
I had a text before the show reminding me of a previous guest saying that we were headed into a drought, and he's had 8 inches of rain in 2 weeks.
Right.
He's good. There's lots of those areas, but there's plenty of people who are hurting. 8 inches
of rain in 2 weeks is not necessarily what you want either,
no,
right?
And that's what he's like, I just need it to stop so I can get going. Let's skip down to Matt in Amherst, because Glenn, we kind of answered your question already, and Gary, we did as well. Matt wants to know what needs to happen for the markets to rally, but conversely, what needs to happen for them to lose more support?
Okay. What needs to happen for the markets to rally? That's a really interesting question, because I think gone are the days where we're going to be stimulating the economy to the extent that we had been during the pandemic. So the inflation numbers of 8-9%, we're not going to see that again. But for the market to rally, if we can see this soft landing where inflation, we don't see a bubble burst, inflation just subsides, doesn't go negative, we don't see deflation, but goes from an 8% to a 4 or 3%. Well, there's still inflation there. So there's still reason for these commodity funds to need to have these inflation hedges on, which means they stop their selling, okay? And then, you go back to trading grain fundamentals, okay? The longer term forecast for August is really rather scary. And you say, oh boy, this could be a problem because with the demand that we have on the USDA balance sheet right now, we can't lose any of the yield for soybeans. And then you look at the forecast for August, and you say, well, I don't know how that's going to be possible. So we need the funds to stop selling. That's really step one, and that's the most important step. Now, how do these markets keep going down? Again, look at a chart of 2008. If we are, in fact, at a place where we are getting this inflationary bubble burst and headed to a recession, again, 2008 is the roadmap for this sort of thing. This means the carnage is just beginning. Again, 2008, we put our high in June beans, hit like $16.55, and we were down below $8 by the time we got to the end of the calendar year. Nobody wants to see that, especially after paying high input costs. If you haven't sold high-priced grain, you are very much at risk. You could potentially, this could be a train wreck. I don't want to say for sure it is, because maybe we do get that soft landing. Maybe we don't get this recession. Maybe inflation just cools off but stays there to some extent. But if this is that bubble burst, man, we could have potentially taken one of the best years we might have had in our career into a year where we are wildly negative.
Did you watch the movie The Big Short?
Yeah.
That was a housing bubble.
Yep.
They talked about that. Do we have something that detrimental to the economy that could go poof?
Okay, 2 things. The market cap in the subprime mortgage market that was lost in that was $1.3 trillion. Cryptocurrencies lost $2 trillion. It's, from a monetary perspective, it's already a bigger loss. In fact, I think it's one of the largest wealth destruction events in the history of humankind. That being said, there is a difference between the two. The housing market bubble burst, the subprime market bubble burst affected banks.
Yeah.
And that was a big problem for them, and also affected housing values. There isn't the same domino trickle-down effect, not as profound as there was in 2008 with the cryptocurrency market. However, look at what the stock market's done. I mean, there's a lot of things that are there are some similarities there, and you have to be concerned that there is this risk out there. Again, I'm not here to say that's happening for sure. I really hope it doesn't, Paul, because that's not going to be good for anybody.
Right.
But you have to be, in the last 2.5 years, throughout this entire rally, this right now is when you have to be the most afraid of downside potential, and you can't just be complacent. If you were complacent this time last year, buy the dip, or don't sell, or whatever, that worked out fine. Right now, this is the time frame where you have to have the most concern.
I can't even comment with these things that you said. You've given me enough dire. Let's finish with weather, because that's one of those stories that could ride in and save, except if you're the unfortunate one who's dealing with it. Sam in Eagleville, Tennessee might be one of those people who's depending on the weather here. He says, how's the dry weather going to affect the corn crop here? He's in the southeast. How does weather become a story? Because not everybody gets the weather. You saw the pictures in downstate Illinois. They needed the rain, and they finally received some this week.
Pretty good amount, yeah.
But it's extended. If you looked at that weather map in Peter's story, Indiana, southern Ohio, Kentucky, Tennessee, on south. Is there enough of a weather story to rally us?
Yeah, it's kind of interesting. Like if you take last year's drought monitor, where it was all centered in the Dakotas and Minnesota and part of Nebraska, and you flip it over, now it's in the opposite corner of the grain belt. The rains that we had this week, I think, alleviate a decent amount of that. There's still going to be the have-nots, and you feel for them every year. I mean, you really felt for the Dakotas last year, or even planting this year. But now you feel for the Southeast. That's a problem. But again, it's a national average yield, right? It's the whole. And I'm going to say, after the rains that we just had this last week, or in the last 10 days, I don't think we deviate very far from the 177 that the USDA has on their balance sheet currently. Maybe it can be 176 or 175. I don't really see it dropping below 174. Now that we've gotten $1 million rains in a lot of places going into pollination, it's the soybeans that are the big question mark. What's the weather going to look like in August? Because the longer term forecasts are really not very optimistic for a very large portion of the growing area.
See how it all shakes out. Ted Seifried, thank you. Good to see you.
Always a pleasure, Paul. Thanks for having me.
Appreciate the time. And next week, we are going to look at the challenges for improving water quality. And Chris Robinson will join us to analyze the markets. Thank you for watching. Have a great week.